Holy smokes, everyone. One of the biggest cons in history is going on right now, and most people are completely blind to it. This con is affecting you watching, it's affecting me, and it's affecting everyone watching. If we don't bring more awareness to how this con is done, more people's livelihoods are going to be destroyed. We will see more homelessness, crime, unrest, and hunger. And this con is done with creative accounting, so most people don't even know that it's happening. You want to know what it is? Inflation. Now you may think, oh, what inflation? Everybody knows what inflation is. Boring, on to the next video. Well, I don't think you know what exactly is going on with inflation right now and the way they're using inflation to scam everyone, to rob everyone, and to tax everyone. And guess what? The latest CPI, the latest official inflation numbers are still going sky high. We just had the latest CPI numbers released yesterday, and we're going to go over them. We're going to go over how they're skyrocketing and how they're using inflation to destroy your livelihood. Because people, if we don't educate our family and friends, they're going to keep doing this to the people, because most people have no idea how the economy works, how the financial system works, and how inflation works. But if you're watching this video, I think you have a pretty good idea. Okay, everybody, let's not waste any time. Let's get straight into the data. So look at this, everyone. US consumer prices post the largest gains in 13 years, and they think inflation has likely peaked. But has it peaked, everyone? Let's keep looking. So this is the latest data, everyone. Look at this. The consumer price index increased 0.9% last month, but in a moment I'll show you how dangerous that is, and that's also the largest increase in 12 months. So inflation is not transitory, it's getting worse. This is the largest gain since 2008, and we're seeing more and more data coming out that was just like in 07 and in 08. So a lot of alarm bells are going off here, people. After advancing 0.6% in May, so again, it is accelerating. It's 50% higher than last month. Economists polled by Reuters had forecasted the CPI would climb just 0.5%. And you know, it's funny, some YouTubers, they cop some hate for, getting something wrongs. Well, look at these professional economists. Even them, they were way off the mark. So used cars and trucks price accelerated 10.5%. That is absolutely crazy, everyone. And I don't know why I didn't see it before. We all should have been investing in used cars in order to hedge against inflation. But just a bit of speculation, what could be going on here. Obviously, there's a semiconductor shortage and the chip shortage. Also, an alarming trend I'm seeing is you're seeing more and more people having to live in their cars. So used cars and trucks, even if that does become a form of the housing market, even the used cars and trucks market is becoming unaffordable for housing. So that was the biggest jump since 1953 when the data began. And that's also a 45.2% year-over-year gain. So used cars and trucks are up nearly 15% in 1 year. But you know what? Only a little bit of inflation here, guys. So it also says here, demand is mostly being driven by rental companies desperate to restock after offloading their fleets at the height of the pandemic. But there are signs that inflation is spreading beyond sectors at the center of the economy's reopening, with consumers paying more for food, gasoline, rents, and apparel last month. That could sharpen criticism of the very accommodative monetary and fiscal policies of low interest rates and nearly $6 trillion in government relief since the pandemic started in the United States in March 2020. So this is what I keep saying, everyone. Every single recession, they have to stimulate 10 times more than what they did in the last recession. It says $6 trillion here they've done in this recession. Well, it was $700 billion in 08. So what do you think they're going to have to do during the next recession or the next downturn we face? They're going to have to print $50 to $100 trillion to get the same effect. It's called the law of diminishing returns. And it's kind of like, caffeine. You start drinking coffee, you get a bit of a hit, but then eventually, the coffee or the caffeine doesn't do anything. So you have to have a higher and higher dose to get the same effect. It's the exact same thing with money printing, but then what that does is it devalues your dollars and it creates more inflation. And of course, our favorite bank in the world, the Fed's preferred inflation measure, the core personal consumption expenditure price index, jumped 3.4% in May. Again, that was the largest gain since 1992, but nothing to worry about here, people. No inflation. And also during the Fed's minutes from June 15th to 16th, officials saw inflation risk tilted to the upside, and the central bank as a whole felt it needed to be prepared to act if these risks materialized. Well, what are they waiting for, everybody? We've got 10.8% inflation annualized. That's right. If you take this 0.9%, because again, they break these numbers down into months, so like, oh, just 0.9% in a month, not a big deal. Well, annualized, that's double-digit inflation. And we got the Fed Reserve just, sitting on their hands here saying, oh, I don't know if we should act now. Maybe we'll wait. Maybe it'll be transitory. It's been over a year now. First they told us, they'll just average 2%. Then they'll say it'll go a little bit above it. Then they said it'll just be transitory. Well, now it's been over a year. And they also said it's a base effect. It's because of inflation last year. But what's not a base effect is the month-over-month data. And the month-over-month data is increasing rapidly. And let me show you how dangerous this is. And let me show you a real world example of what this inflation would look like in our daily lives. Let's say, for example, your average monthly grocery bill is $500. Now, let's just assume that this inflation data increases at 0.9% every month. So per year, that's 10.8% annualized. Now, just to show you how dangerous this inflation is and what this could lead to, what this would mean is your monthly grocery bill from $500 per month, with inflation running at this rate that it's running now, your monthly grocery bill, look at this everyone, it would triple. Your monthly grocery bill will go from $500 to $1,465. Could you afford that, everyone? But wait, there's more. Let's take the average rent of $1,500 per month. And again, going at the same inflation rate, what would your rent go up to after 10 years? $4,396. Could you afford $4,396 a month rent, everyone? I don't think so. Now, we all know housing affordability has been a big issue, but if you think housing affordability is a problem now, you haven't seen nothing yet. Let's look at what the average, let's say $350,000 home in the US would be after 10 years at this inflation rate. It would go to $1,025,000. So you think, a starter home of around $350,000 or more on the affordable end of a home of $350,000 is unaffordable now. We could get a whole lot more unaffordable if the Fed doesn't act now. And of course, gasoline, that's been a hot topic right now. And let's say, for example, gasoline prices are $4 a gallon. Well, let's look what gasoline prices would be after 10 years at this inflation rate. That's right, it would go to $12 per gallon. So do you see how dangerous inflation is if you let it get out of control, people? This would make the cost of living literally unbearable. Now, there's a big scam going on. Well, inflation's good because then that means your wage goes up. Well, wages aren't keeping up with inflation. And, this is a scam what they'll do. They'll say, for example, hey, I'll give you a 5% pay rise, but the cost of living is going to go up 10%. Why are you really making more money? No, you're actually making 5% less. But, if you tell people, look, I'm going to give you a 1% pay decrease, but people will say, no, I can't have a pay decrease. Well, what happened if prices went down 2%? Well, you'd actually be taking home more money and you'd have a better standard of living. But people hate deflation. The government and the banks hate deflation. So what they do is they use inflation to scam people to think, oh, you're getting more money. The cost of living is going to be better. Your standard of living is going to be better. Well, look at the standard of living now, everyone. You've got couples with, one kid struggling to make ends meet where they're both working, where, 50 years ago, one person could work and support a family of 5. But of course, what are the officials saying? They're saying, don't worry, everyone, it's just temporary. Just like taking us off the gold standard was temporary. This is what the governments always do to try to prevent panic, and so people just lulled into this scenario. It's kind of like the analogy of putting a frog in a hot boiling water. It will just jump out straight away. But if you put the frog in cold water and you slowly turn up the heat, the frog will boil to death. This is literally what they're doing with inflation. They're just slowly increasing it up bit by bit. They're just like, 0.9%, that's not a big problem. Well, I've just showed you what happens with this inflation rate over 10 years and, we'll all be dead financially. And this is my biggest fear. My biggest fear is, people just going to be completely blind. They're going to go their daily lives. They're going to watch the Kardashians, watch the foosball, and they're not going to have any idea what inflation is or what's happening. Or they're going to go to the grocery store and be like, oh, everything's expensive, but have no idea why. And this is why I'm making these videos. What I fear is the Fed's not going to do everything. They're just going to keep letting it run hot, and we're going to be sacrificed in order to save the banks and save the financial system. Because to get inflation under control, they're going to have to lift interest rates at least by 3%. And if they did that, the government won't be able to service the debt because they're in $28 trillion in debt. They can't afford a 3% increase to keep servicing the debt. They would default. And that's right. That's all it's going to take, everyone. Just interest rates to go up 3%. And what did the Federal Reserve say to kind of look like they were going to do something? They said, okay, we've got really high inflation now. So what we'll do to deal with the high inflation now is we'll lift interest rates by 0.5% in 2023. What's that going to do, everyone, to stop inflation now? 0.5% isn't going to do anything. And I think what they're going to have to do is bring forward those interest rate hikes sooner and steeper. But again, that's going on fundamentals and what they should do. And you know what's funny? They told us that printing all this money, Jerome Powell said, that increasing the money supply has no correlation with inflation anymore. Well, I'll pull up a chart here. You can see, everyone, as they increase the M2 money supply, the CPI data started accelerating straight away. It is 100% correlated. But what you have to know is the government and the central banks, they're in full panic mode. Because you know why? Because they're stuck in between a rock and a hard place. They've been backed into a corner. And they've got two choices. Let inflation run hot, sacrifice the people, or lift interest rates 3% to get inflation under control. But if they do that, we're going to enter into a recession, possibly a prolonged depression. The stock market would crash, real estate would crash, cryptos would crash, even precious metals would crash. So people thinking that precious metals is a safe haven, that won't be safe either. And this is why I think they're in a panic and they're so quickly trying to create these central bank digital currencies. Because what I think is going to happen is there's going to have to be some kind of monetary reset or financial system reset, because this current fiat currency cycle is on its way out. And what you have to know with every fiat currency throughout history, not 75, not 85, 100% of them have failed. And what they're going to have to do to get us out of that recession by lifting interest rates is they'll have to print $50 to $100 trillion to get us out of that. And by that time, people will just lose faith in the currency and there'll be absolutely nothing they can do to prevent a collapse. Now, you may think this is all doom and gloom, but people, this is just the facts. This is the scenario we're in, and I'm doing this for educational purposes. And I'm also doing this to try to help. So what can we do right now to prepare ourselves for the crisis that will eventually come? We can't time exactly when it will come, but I do know one is coming. Well, it's very hard to decide what to do when the Federal Reserve is not being transparent. If the Federal Reserve told me or told the people, okay, everyone, look, inflation is going to be really high, but we don't want to crash the economy, so we're not going to do anything to address inflation. Well, then you know what I'd say? I'd say, look, keep investing in the stock market, keep investing in real estate, because high inflation, if they don't lift interest rates, prices will keep going up. But they're kind of still saying, oh, look, I think we'll, address inflation. We will lift interest rates. Well, if they do lift interest rates, then all those assets are going to fall. So I've been doing a lot of thinking, and what I think is a good idea to do, again, it's not financial advice, just my thoughts and opinions. You want to have some money in assets like stocks, real estate, precious metals. So if the Federal Reserve doesn't act on inflation, you've got an inflation hedge there, but you don't want to be all in. You want to have a good pile of cash too, because if they do act on inflation, and we saw when this CPI data came out, again, like I've been warning, the dollar has been increasing, the dollar index rose, then that means your cash, the purchasing power would actually increase when interest rates go up, asset prices will go down, you've got some cash there, and then you can go in and buy up everything for a discount, buy the dip, as they say, but you'll be buying the real dip, not just these little 2 or 3% dips. More like if interest rates went up 3%, we'd be looking more at like a 20 to 30% dip. So everyone, that's just my thoughts and opinions of what's going on in inflation. You let me know down below, will the Fed act on inflation, or they're going to let it run hot and sacrifice us plebs to bail out our banking lords yet again? Now, for all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you up to date with the latest happening in the economy, stock market, housing market, and global finance news. If you're bored, I'll put up some other videos here. I'll see you all there.